Hello and welcome back to Duke's Copy TV. Now, with regulation change happening across Europe, the law affecting asset management is being widely debated. I'm joined in the studio today by Glen Millar of Kinetic Partners to put an end to these myths and rumours surrounding this and to tell us exactly what this will mean for Switzerland. Glen, thank you very much for joining me today.
My pleasure. Thank you for having me.
No problem. First of all, please could you tell our viewers a little bit about the latest news regarding the law affecting asset management?
Okay. I mean, Switzerland has been rumbling through a change to the law affecting collective investment schemes for over a year now. The first draft of the change in the law was published in July 2011. We're on about version 4 now, and we're at a situation now where it's close to final. The law itself, just a little bit about the law, is a little bit like the Swiss equivalent of the AIFMD, the EU equivalent law affecting asset managers in the European Union. And it was designed really to adopt similar rules, regulations, and a sort of equivalent regulation for managers here who'd previously been viewed as perhaps it was a lighter regulatory touch in Switzerland. Now, when we look at the myths and the realities, it's fair to say that the first draft of the Collective Investment Schemes Act would have been quite severe and damaging. It was a little bit like EU plus a Swiss finish, which was not what the industry wanted. The version that the Special Commission of the Federal Council put together on April the 24th has now gone through the lower house of Parliament. I've seen some of the feedback from that, and it seems to be passing relatively unscathed. And most of the key things that the industry bodies and some of the asset managers wanted to be within the text are indeed in the text. So the myth that Switzerland was going to put in a set of rules that were out of proportion to what the European Union was doing, I think are wrong, although it's fair to say there is going to be a need for a lot of action on the part of the asset management community in Switzerland as a result of the changes. And this, whether you're a single asset manager with a few million under management, what do you do here? Are you an investment advisor? Are you a manager? Through to the bigger hedge funds that for the first time find themselves subject to proper asset management regulation in Switzerland if they're managing a foreign collective investment scheme. So there's quite a few changes for them to digest.
Yeah, and just talking there about the people who will be affected most by this, and what will the main changes be? Okay.
The people that will be most affected are those managing foreign collective investment schemes. If you had a Swiss fund, you probably have been regulated by FINMA for quite some time and you're used to dealing with it. If you're managing a foreign collective investment scheme in a non-retail, typically UCITS, a non-UCITS type fund, and you're executing portfolio management or risk management activity from Switzerland, then you need to have this on your radar. You need to work out what it means for you. And now, as one is looking at Switzerland as a place to be regulated, some of those structures are going to be put into question. I expect firms like ours will come increasingly under demand to advise people navigate the way through the options that are available to them.
Yeah. And you just spoke about Kinetic just then. What is Kinetic's future with this new law, do you think?
Well, Kinetic Partners has been following the trend and the developments in the collective investment schemes industry in Switzerland quite closely. We've moved many managers here over the years, and the regulation of these managers is something that is very, very important to us.
And you personally, can I ask, what do you see for the future of this law, and what do you see for the future of asset management in Switzerland?
Okay, future of the law, I think it will go through the second round of parliamentary checks and debates in September, relatively unchanged. There might be one or two changes regarding the de minimis, the exemption beneath which managers won't be required to register with FINMA. I expect that will align with the AIFMD limit. And in terms of what that means for asset managers, they'll have, the new law will come out January 2013. managers will have 6 months with which to register and 2 years within which to comply. So I think that's the next steps. And what it means for the asset management industry in general, I think there is a great opportunity for Switzerland to seize this and become a centre of asset management expertise, as it has in the past and existing in areas like wealth management, and really develop a powerful asset management location and really develop asset management as a proper regulated activity here.
Thank you for joining me today, Mr. Millar. It's been an absolute pleasure to have you on the show.
Thank you for having me.
That's all from us at Dukas Copy TV today, but make sure you click back to the website for more interviews and updates. But for now, goodbye.